Hi guys, Ivan here from marketrespect.com. Within this video I will be analyzing the euro dollar and how I came up to this point, where on the picture you can see here right now on the screen. What I'm going to do is to show you how I analyzed it in the past. Of course, it's easier now, you will say, when you see how things played out. But I will show you some tricks with Fibonacci and the structure and also the pattern that appear in the market, and that are indication of a bearish or bullish movement. What we will do is make a video that's not longer than 10 minutes or 10 to 15 minutes, and analyze things that happened in the past. So let's start. Firstly, we will delete everything that you see here on the screen. Okay, with this trend line, we can make a constatation that the trend is up. So here is trend line which is valid. It has many taps, and in some point in time the trend line was invalidated. So the trend line was broken, and we in the next how much is this? Let's say it's pretty much, it's like 13 bars, so 13 months. We saw a price action which was like retesting the broken trend line. So remember, this is the monthly chart, so patience here is very, very important. But it's also important that you analyze it, because it's giving you a picture where the market is going and how are you going to position yourself within it, if you're not a scalper and if you're not using the 5 or 15 minute chart. Okay, after this retest on the trend line, we could make a decision to go short. The other one more confirmation to go short here is the next one. If we drew a Fibonacci from the top to the bottom here, so we will see that the price is rejecting the trend line, so it's retesting the trend line, and also it's stopping almost nearly at the 78.6 retracement level, which is very important retracement level. So 61.80 and 78.6 are the most important retracement levels. So at this point in time there was a really good short opportunity on the euro dollar, and from 150 to let's say 18, you have quite some pips to catch. Okay, now we saw that the trend is short, so there's no doubt about it, the trend is now short. We can delete this, and we can delete this Fibonacci. It's also not useful, but I will speak about targets later. Now I will skip that part. what we can see now here is that the market is retraced up, came back down and came back up. We can here now wait for the second entry point on this pair. We would draw a trend line something like that. So to tap as many candles as possible, not to cut the body, you can cut the wicks. And we would now, let's say, draw our Fibonacci here from this top to this bottom. Here it was a little bit tricky because the 7860 level was broken, and we might get an indication that our downtrend is over. However, if we haven't seen a clear break on the trend line, so break and retest like we saw here in the previous big move, it's a little bit tricky. We could go long and risk something loose a little bit, so that's all part of the game, or we could just wait because the picture is not clear. Now when we are came back down at the 7860, below the 7860, we are again sure that the trend is down. We are sure that the trend is down. So we have the confirmation from the Fibonacci level. We have this counter trend line broken, and this is now our new level to go short here. And also, so here we have also an opportunity to earn potentially 2,200 pips, something like that. So where did the price stop? At the previous lows. So the previous lows was the structure where price stopped. Okay, now trading next, we will delete again all this, and at now this point in time we are shorting, and we are here in the position. What we can do next when we see or a retracement coming is put the Fibonacci on the next leg, and see also here that the trend line of the short positioning is broken. And what we're going to do now is observe whether market will respect the 61.80 or 78.60 level. If it does, if it respects these levels, it is a good indication that it will continue to go down. And the targets, the usual targets, are the minus 0.271 or 0.618. This is the opposite of these targets, so 1.27 and 1.618, which is the Fibo extensions, but in the opposite way. You can see here that the structure, let's say, which is called a W, which I will explain later. So this is just a sec. This one, no. This leg is the first leg, second, third, no. So this is a bearish W, okay. And Fibonacci here is telling us that the market respected the 61.80, also combined with the long-term trend line. You see that it perfectly matches, and this is our now next perfect entry for short. You can also notice that the time to develop this short trade and the short down move of again another almost 3,000 pips was 1, 2, 3 months. So you had to wait for 3 months to be sure that this will continue to go down. During this time we have to be patient and we have to scale in on a lower time frame. We can also use this counter trend line break. So this is the counter trend line where we are also sure when this trend was broken that this continuation of the downside will be the next large move. Okay, now deleting everything here. When this move ended and this also we can also check where this move ended. So it ended within this range, which in the past was a support, and the support which became a resistance, and now again when broken became a support and became a support for a long time. So until now also valid support. So these levels around 1.05 are really on the euro dollar a good support point. Okay, now here let's say we are now looking at this short, very sharp trend, downtrend. The trend line is very sharp, so very steam, that's how to say it. And in this point in time we can conclude that the trend might change. Also have bearing in mind this point when it first stopped, which also correspond with this one. We don't know the next one, of course, and then we don't know the next one that is going to happen. Here is something that is called a name pattern here, which is a bullish pattern. So up, down, up, down. This is a name pattern which indicates an up movement. Here, so this was a good entry point on the bottoms of these levels. So there was a good entry point on the monthly, or on the weekly you can maybe find even better entry points. So when we are now looking at this pattern and possible profit targets for this, we will put the Fibonacci on this last leg here and see that and observe if the down movement will stop on the 78.60 or 61.80. If not, then so if the market doesn't respect the 61.80 or 78.60, the next target is 1.27 or 1.618, where the market stopped. So the market stopped exactly, okay, I'll be more precise here, and here the market stopped on this 1.618 extension Fibonacci level. I know it's not easy to recognize, and it's easy to see it in the past, but this is something that needs to be learned to spot right on time. Now, having in mind that this down movement was invalidated and came to our target, so completed the move, so the move was completed here. We can now again check what we think is going to happen next. The last large or impulse move was this one, and we will now make Fibo level, let's say, okay, we will delete this one. We'll make a Fibonacci from here to here. So on the highest point to the lowest point, and we will also notice that we have here now the trend line, which is again corresponding to the 61.80 of the Fibo retracement. This was also a very good indication, along with this, let's say, trick of the Fibonacci target that we had seen, that the target has been met. So 1.618 is also corresponding with the 0.618 retracement level, also corresponding with the trend line. And this also, when we see okay, we will delete now this M pattern. Now also drawing a counter trend line that is now broken. This is now the third confirmation that the trend is changing and that we have now again a bearish move coming. The candles here are getting smaller and smaller. We can extend this level up to here, and in the future here, and we can see what we can expect then in the future regarding the positioning, yeah, let's say. So we will remove this also, we will remove this also, and we will remove this also. We can just leave this one too. So let's continue. So we said that so this was a good entry point for short. Where it will stop we cannot quite say, but we saw that this was really important level where turning point might happen. Now this trend line is still valid, so it still can be left on the chart. And if now we drew Fibonacci from the bottom to the high of the last up move, we will see that the retracement level is also correlated to this zone, let's say, of support. Here now we have an indication that if also looking this trend line, this downtrend line broken, retested 78.60 and the support zone from, I don't know, 1997, okay, that this was a good opportunity for a long trade. Of course, and that doesn't mean that you're going to take a long trade on the monthly chart, but you have to analyze the monthly chart, and then you will take your opportunity and scale in on a smaller time frame. But this is very important. You see how clear the picture here is. This is very important. So we see now that it is an uptrend and we can use it, but we have here a major downtrend which is still valid. So let's say we are exploring you know, this up move, but here we came up to the point where now we have to see what we are going to do with this position. Let's delete this Fibo and let's delete this downtrend line. So this is the only thing that's valid now, and the next thing we can do here is to draw a Fibonacci level from this high to this low and see that now we have here a situation where the price is currently sitting on the long time frame, so the very long down, sorry, not time frame but trend line, so very long trend line which was respected numerous times, and also sitting on the 6180 retracement level of the last down move, and it's very indicating what will happen next, whether it will continue to push down or it will break, make, let's say, it will make something like this, so break, then retest of this trend line, and if it does so, then we will have a situation like this. We will then draw a fib. Let's delete this one. We will then draw another one from the bottom to the top where the break is taking place, and we are expecting then a retracement here up to this, I don't know, maybe 61.80, maybe less, but let's say that we are expecting a retracement, and then we are ready at retracement again along with the retest of the trend line, and then we are ready to take a long position which will then have a target of this and this. The next scenario, this is one scenario. The next scenario, what we can expect, and we have to pay attention to it, is that the market is going to continue. The market will respect this 61.8 retracement level, and it's going to go down, and it's going to make something like this, and again okay, then we'll make another pullback here maybe, and then it'll go back to this level, so, or to even to this level. So something like this. If we see something like this, let's say it's if we make another, let's delete this one so it's not confusing. So if we now make another Fibonacci here, we will see that the target is here, the 1.618 or 1.27, depends, but also and it's very strong to support level, which needs to be taken into consideration as well. My personal view is that we are going to go above it, so break it, make a retest and go up, but the scenario 1 and 2 are possible, and you have to take into consideration both. You need to follow the move, and on the smaller time scale see how you will smaller time frame, see how you will scale in and how you will position yourself there, and where will your stop loss be and where will your take profit be. So that's all from me. We already make a longer video than I intended to, but okay. The second video I'll be doing maybe today, maybe tomorrow, but if you like this content, let me know somehow. You will figure something out. Stay safe, stay healthy, and with best regards.